welcome to The Firm. Exactly 12 months ago, we brought you the global debate on tax morality, and it's been a busy year since then.
In February 2013, Australia proposed a new tax legislation to counter tax avoidance and multinational profit shifting. That same month, US Senator Carl Levin proposed legislation that would require country-by-country tax reporting for all SEC-registered companies. In May, the 27-member European Union considered doing the same for all Europe-based multinationals. In June, the 8 most powerful nations in the world committed to tax and transparency. Next month, the 34-country OECD set out a 15-point action plan to tackle base erosion and profit shifting. In September, the G20 decided on automatic exchange of information starting 2015. And just last month, the EU proposed amendments to end double non-taxation.
There probably hasn't been a month this year when tax did not make the global headlines. And there probably isn't a multinational company in the world who isn't facing tax scrutiny. What then is the future of tax? Well, at the recently held FIT conference in Mumbai, I sat down with a one-of-a-kind panel. No corporate tax officials, no Big Four consultants, no savvy tax lawyers. Instead, I asked one revenue head and 2 professors about the future of tax and the big changes on the anvil.
Basically, last year, everything changed. I think we have to be aware of that. I think there's a very high-level political commitment. And I think also that it's set in when you talked about morality, and I would like to comment on that in the sense that inequality has actually risen. The gap between the rich and the poor is getting worse, even within the OECD, even in the countries with the better rates, even so. So I think it's becoming a very political issue, and apparently that, the multinationals have to raise up to it and start paying their dues, as people see it from a political point of view.
Professor Lang, do you think that the responsibility lies on multinationals, or do you think that it equally lies, or more so lies, on revenue authorities, on governments, to write tax law that's easier to follow and that doesn't allow for loopholes that multinationals can exploit?
One of the problems is that we tend to mix policy issues on the one hand and the interpretation of the law on the other hand. And I think we should keep that separate, but that's not always kept separate. Sometimes I think in some countries there is a certain influence from that political debate in applying the existing law. And I think as long as we live with the existing provisions, we have to apply the existing provisions. And when there is a need to change the provisions, then the provisions have to be changed.
The events of the last 12 months seem to indicate that governments do want to change the law as well.
Yeah, I think what we see is the general theme of that discussion we are having the last 12 months and even before that, I think, is more or less fairness. And I think that fits into the bigger picture, because what we've seen even before in the last 5 or 10 years, that there is a shift also in the tax architecture from direct taxation to indirect taxation. So in most countries, indirect taxation has become much more important. Many countries have either introduced a VAT, a value-added tax, or are considering a VAT. The only country which has not been, the only major country which so far has not been seriously considering a VAT is the US, but all other countries have either introduced a VAT or are considering introducing a VAT, and VAT is of course a revenue generator. And therefore I think in the long run also, and we will see, and we've seen already, that direct taxes will lose relevance, at least as a revenue generator, and therefore I think it's kind of natural that the focus is more on fairness issues also. Of course, VAT has in its nature a kind of regressive effect, so therefore politicians in many countries where VAT plays an important role are more concerned now how to achieve fairness or how to compensate. And of course there are different means to do that.
Is it fairness, Professor Bishal, or is it that the last few years the global economy has gone through a debilitating financial crisis? Revenue is under pressure, and therefore these are things that are actively on the agenda. If the global economy recovers, if countries start seeing growth come back and hence revenue come back, Do you think the BEPS 15-point plan will be as important to us 2 or 3 years down the line as it is today?
Well, this issue of fairness is a question of fairness to whom. Of course, OECD, there are 150, or a little over 150 countries that are not members of the OECD. Now, in those countries, they talk about, or think about fairness, not only in terms of revenue, but also fairness in terms of economic development.
Right.
And what we're talking about, and there are some countries like the United States, for instance, that would not extend what was called a tax-sparing credit for purposes of economic development in the developing countries. And so there'll probably be a number of developing countries which will say, well, how much fairness is enough in terms of rate structure? Because if a multinational corporation is paying an effective rate of 2 or 3%, that's clearly not very fair. We know that. But if they're paying the effective rate in the particular country in which they're headquartered or located, and that rate is 20 points lower than a rate in another country, is that fair? And the answer is, I think so. So this is a question, it will become a question amongst various countries in terms of saying, gee, to what degree should the tax system be employed, not only to collect revenue, but also as an engine of economic development. Interesting.
The BEPS report may take some time to produce tangible results, but tax activists are in no mood to wait, putting pressure on governments to change now. I asked my guests about the top changes they expect the soonest.
There will be more exchange of information. There will be more automatic exchange of information. That's the latest. And I think that will also change the revenues, the way that we are administrated, because the whole structure will change within the administration.
Exchange of information has already become very important and will become even more important. Personally, I hope that the pendulum will swing back at least a bit as far as legal protection is concerned, because today we are talking only about how we can make exchange of information more effective, more efficient, but we don't talk about legal protection of the taxpayer. But we also see that in the past, I think, international relations in the tax area had mainly been bilateral, and I think this is going to change. The idea also closely linked to the BEPS project is to change bilateral basis on a multilateral basis, to do that more effective, to speed up with changes in the tax treaty area. We see that in the area of exchange of information as well. We have multilateral agreements already in place, so I think there is a trend towards multilateralization also. And I think another trend we also see that soft law has become very important in the tax area. So,
can you explain soft law?
Well, we are used to apply conventions, treaties which got the approval of the parliaments in the various contracting states. However, what we see in the light of the BEPS discussion, but not only in the light of the BEPS discussion, that suddenly we have recommendations of international organizations, but then recommendations even of groups like the G20, like the G8 or so, and those recommendations are extremely powerful. But that's not part of the law, but it's even more powerful than legal rules could be at the end of the day, which I think is a very important development, also to a certain extent a frightening development, because there is no rule-making body, there are no rules how to make the rules at the end of the day, so therefore the stronger players in this game, they will survive and they will win, and the weaker ones have disadvantages.
Actually, two things. One would be to, instead of having a so-called arm's length standard with regard to allocation of income, what they need to do with the multinationals is to take a look at the fact that they have residual profits in addition to what might be profits of the normal unrelated parties. And they have to find a means of allocating the total profit. That's one. Two, what might be another interim solution, at least for a while, would be on the part of a number of countries would be on outbound payments, a mandatory withholding even under the treaty, with the proviso that if the taxpayer can show that it indeed has paid a tax in another jurisdiction, that withholding tax would be remitted back to the taxpayer. Otherwise, it'll be...
You know, the Indian revenue authorities are going to hug you on that one, right?